Good morning, everyone, or good afternoon, depending on where you are. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. And today we're going to do this masterclass session. We highlight a particular strategy today, which allows you to test specific days and months of the year, more like an seasonal kind of thing, where you can identify certain patterns if they exist, of course. Sometimes it's difficult to have seasonal patterns in something that moves in random patterns, but sometimes, having the ability to test different scenarios just gives you a little bit of an understanding on how the market moves certain days, on how they move certain months. Before we start on today's topic, let's go through some of the disclosures. Keep in mind that any symbol and idea that I talk about here today is just for educational purposes only. These are not recommendations of TradeStation, and also that active trading is not suitable for everyone, and that past historical performance is no guarantee of future results. Today, we're going to talk a little bit about strategy performance, and I just want everyone to be aware that whatever happens in history, very unlikely for it to happen exactly the same way going forward. If you've developed strategies in the past, and you've tested them, you know how risky it is to think that the strategy will do the same thing going forward. For additional information on these disclosures, you just go to www.tradestation.com/important dash information. All right. So before we talk about testing specific days and specific years or specific months of the year, let's go ahead and talk about some of the reserved words and some of the easy language syntax that are used in some of these strategies that allow you to capture certain days and certain months of the year. I think that's important for everyone to understand. Oh, by the way, let me go ahead and share this with everyone. I had the page open and I think I just closed it. So let me go back in there. I want to share with you all not only the PDF that I have here, but also the custom strategy that we're going to be taking a look at. So let me just pull it up. Okay, this is the PDF we're going to be using today. And we are going to be using this particular strategy. It's a custom strategy just because we don't have anything that's built in that allows you to do this type of testing. This idea was developed by a colleague of mine, and that's it's fascinating. It's just interesting how you can test the entries and exits on specific days of the week or specific months of the year, and get some statistical measures around that concept. How valuable they are, I mean, I'll leave that up to you to determine. I don't use it in any of my trading strategies, but sometimes, I sit here and play around with this tool because it's interesting. So we're going to get to it in a little moment. So let's go through the PowerPoint first. One of the first things that I wanted to talk about is day of week. This is a reserved word, meaning that if you type it up inside of an easy language document, it turns up blue. When you use it, it returns the day of the week for the specified calendar date. So you use the reserved word, you plug in the date, and it tells you what day of the week it is. You can see right here, let me turn on my laser pointer. You can see right here that it can be a number from 0 to 6, 0 being Sunday, 6 being Saturday, and anything in between. So if you get a number 2, then you know that's going to be a Tuesday. So the reserved word is just like this, day of week, one word, and then inside parentheses, yeah, you don't have reserved word, but you plug in the date and it does its calculation and it tells you which day of the week it falls under. Just like that, day of week and a date. So The date is going to be a numeric expression. Usually the way that EasyLanguage reads the date, which is a 6 or a 7-digit number in the format YYMMDD or YYYMMDD, depending on which century you're on. If you're on the 20th century, meaning that the year is 1999 or in that range, then you're going to have a 2-digit year. But once the 21st century started, the year jumped from 99, being 1999, to the year 100, which is 2000. So that was kind of a fix inside of EasyLanguage to account for the Y2K transition. 1999 was 99. So the year 2000 became 100. So that's why when it comes to dates, sometimes you have a 6-digit date and sometimes you have a 7-digit date, depending on which date it is. All right. Some examples: day of the week, 980804. This returns a value of 2 because August 4th, 1998, which is the date that is plugged in here, is a Tuesday. If we have a day of the week using this 101-10-24, it returns a value of 3 because October 24th, 2001 is a Wednesday. Exactly how it says there. When we look at the code of the strategy that we are going to be using today, you're going to see that we're going to be using day of the week and some of these reserved words that I'm talking about. All right, so this is just additional information on, oh no, this is something else. This is date, and then you have what it means. The word date, if you use it inside of EasyLanguage, will always return the current date or the date of the bar, the date of the bar in this format, okay? Unless you're looking at, the 20th century, then it's a 2-digit year. But for the most part, since we are already in the year 2022, then it's going to be a 3-digit year. See, here are some examples: the date, and if you plug in this number, it's going to be January 7th, 2000. All right. So here's an example on how to use date. The month is also very similar to the way that you use day of week, where you plug in a date on the reserved word month, and it returns a number from 1 to 12, letting you know which month of the year corresponds to that date. A lot of times you're going to want to know if it's which month it is or which day it is, especially in this type of strategy where we're going to backtest the performance based on where we enter and where we exit. So these are the examples in which you use month. And year, also in the same manner, if you put in the word year inside parentheses, you provide a date, it tells you what year it is. It'll return 99 if it's the year 1999, and it'll return 101 if it's the year 2001. Remember how the numbering system works in EasyLanguage. Calc date is an interesting function where it allows you to do a calculation in EasyLanguage of days forward or days back. So you can see the syntax right here: calc date. You have a reference date, which is the starting point, and then the days change. If you include a positive number, it's going to be days forward. And if you do a negative number, it's going to be days backward. But what the calc date does, it tells you which date it is of that day's change. So let's give you an example. All right, so if you have calc date and you have the word date, which is the date of the current bar, minus 14, it's going to do the calculation and return the date that happened 14 sessions before the date that is specified in here. Okay, so it's an interesting way of calculating date. Let's go over to the strategy and take a look at how some of these words are applied and how we can make some sense out of them. So let's go, first of all, let's go and look at the strategy and what it does. I'm going to go over to my TradeStation platform. Let's open up a chart analysis window. Okay, I'm going to turn this into a daily chart. By the way, I'm using a daily chart of corn. I'm using a futures or a commodity, in this particular case, an agricultural commodity, because a lot of times there are seasonality patterns that present on commodities much more often than they do on stocks. Stocks movement is very, at least on most stocks, is very random and it's very sensitive to what's happening in the market overall. So there's really difficult to find certain patterns. But when it comes to agriculture, agricultural commodities, they do sometimes go through a seasonal phase. So having a tool allowing you to test different, days or different months of the year would be interesting to apply on a tool or in a commodity like this. So I have corn. You can do the same testing on wheat. You can do the same testing on other commodities. You can even do the same testing on stocks if you want to try to find certain patterns or what's happening, from year to year. On this chart, I'm going to load 10 years worth of data. And I'm also going to, I'm going to use a symbol that is not back adjusted. I'm not sure if you know this, but a lot of the futures contracts that are available in TradeStation on the continuous side, in this particular case at C, which is a continuous symbol, they are back adjusted. So historically, TradeStation will apply an adjustment factor to make sure that you follow the same sequence of prices, so there's no gaps in between. When you do a historical back test, of course, that's going to throw off some of the entries and exits because they're going to be filled at prices that did not exist in the past. So when I do historical back testing on futures, sometimes I tend to use a custom futures that is not back adjusted so that I use real price data. So I'm going to do that exactly here. So let's go and modify the symbol. I'm going to click on lookup and I'm going to create a custom futures. I'm going to type in the root of the futures that I'm using, which is C. I can see the months that it trades. It trades March, May, July, September, and December. But in this particular case, let's see, back adjustment method. You see, this is the default, absolute difference. What I'm going to do is just select unadjusted. I'm going to leave everything else the same. So the rollover is going to happen at exactly the day where open interest is higher than the prior day. But it's not going to adjust the data. So there's going to be probably gaps in between one contract to the next. I'm going to click OK and click OK. So let's see. If I look at the data here, you guys can see a big gap over here. This happened back in June. And see, we don't see a big gap here from one, I guess right here, there's a big gap here in June. I suppose that was the date when the September contract became active. And we have another gap right here in November. So you do see gaps, and it just gives you an indication that the data is not back adjusted. So you're looking at real prices here for corn. So let me go ahead and add the strategy that I shared with everyone here. By the way, the zip folder that I'm sharing with everyone has the strategy that I'm going to show you right now. Studies, add strategy. There's two strategies. The name is add MC. So it's started than at, so make sure you're aware of that. So you don't look crazy looking in the M's. This is at MC for masterclass, day of week and month entry. And I'm going to combine that with the day of week and month exit. Once you import that ELD that I shared with everyone here, you should have those two strategies on the list of strategies. I'm just gonna click OK. When you click OK by using default settings on the strategy, you don't see anything on the chart because the chart or the strategy is expecting for you to tell the strategy of what to do. So I'm going to go here to studies and edit strategies and go through some of the inputs. On the entry side, so let's go ahead and highlight the entry, and I'm going to customize. Well, the first input is either it's whether you want to this if you want the strategy to go long or short. If you want the strategy to go, well, you have to decide whether it goes long and short. You cannot have a strategy. I guess for futures you could, a strategy that goes long and short the same contract on the same day. That would be interesting. I may want to test that later. But here I have to decide whether I want the strategy to generate long or short trades. Leaving it at 1 means that the strategy will only take long trades. If you want to use short trades, you just change that number to -1. Test month just is a way for you to specify which month of the year you want to test. Here you can put any number between 1 and 12 because there are only 12 months in a year, but you can test specific months if you want. Now you can use entry day of the week or entry day of the month. Let's suppose that we want to test 1, which is January, and we want to enter the very first day of the month. So the entry day of the month, I put in a 1. So from the inputs that I've just gone through, I'm going to go long, January, the first day of January. I'm going to click OK. And then on my exit side, it says day of the week to exit on. I don't really want to exit on a specific day of the week, so I'm going to leave that to 0. What I do want is to end of month exit. So I'm going to turn this into a true expression, meaning that I do want to end or close the trade at the end of the month. Does that make sense? So this is a very quick way for me to test what would happen to my performance if I were to trade the very first day of January and close the very end of January. And it's going to do that over 10 years. So how many trades will I have? Just 10 trades. Let's see what type of performance we get. I want to click OK and close. All right, so if we look at what the strategy is doing, and if I look at the dates specifically, the entry here, the most recent entry that was generated was back in January 3rd. And the exit was generated on January 31st. So it's doing exactly what we asked it to do, which is enter the 1st of January, close at the end of January. There's no more trading activity on the remaining months. If I scroll back, I can see another entry here, but this is, what year is this? This is the year 2020, January 2nd of 2020. And I did that for a period of 10 years. Let's see. Back here, I have an entry. This entry is January 2nd of 2013. And we have that entry going from the beginning of January to the end of January. How well did the strategy do? Let's go to data and click on strategy performance report and the performance summary. Not bad. Not bad for a strategy that I just put in and I arbitrarily said, oh, let's just trade Januaries. Is there something about Januaries for corn that we are kind of discovering here? Not that I'm implying anything, but this type of testing allows you to see that for the past 10 years, if I had opened up a trade on January and closed it, the beginning of January, and closed it at the end of January, I would have made a net profit of $6,600. Of course, that's only on one contract. If I go here to my periodical returns, I can see the profit per year. So you can see that on the first year, the net profit was over $1,700. So most of the years were profitable except for 2. 2015, we lost about $1,300, and on 2020, we lost about $325. So this tab right here, periodical returns, is a good way for you to see what the strategy is doing on period to period. This is an annual report. Let's go and take a look at a monthly. So January is just an average. An average, the strategy made about $660 each January. this is the weekly report. Now, the weekly report is just, grouping all the weeks of January together. You can see that it starts here on 2014, but it only has 3 weeks for 2014. It has 4 weeks for 2015. So it groups all the weeks together for January and kind of gives you a report. If I go to the performance graphs, you can see that not a very good performance. And this is the tricky part, because we've always said that to get numbers that have some statistical value, you need to have at least 30 trades. You have to have a good size of trades in order to make an intelligent and smart decision whether a strategy works or not. Am I able to tell from this that I'll always be profitable every single January? Well, 80% of the time I was, but out of the 10 years, 8 times I was profitable. Is that a good statistic? If it's only 10 trades, I don't think so, but it's interesting, right? That's what I said at the very beginning. This kind of data seems interesting, but is it telling us anything? I'm not sure about that. Let's do something, because one of the things that you can do with this type of strategies is that you can optimize. I selected January because it was the default number in there, but what if we switched it to February? So let's go ahead and do something. I'm just going to do a manual change first. I'm going to come here and say the test month, I want it to be 2. Instead of trading Januaries, I want you to trade Februaries. Let's go ahead and click OK. So you see the trades were shifted. Now my entry is February 3rd, and the exit is February 28th. If I look at the performance summary, and I go to the summary, it's not bad. It's still making money, but it's not making as much money as it did trading Januaries. If we go to the periodical returns and I set this to annual, I can see that I had more losing years than I did trading Januaries. It seems like it's half and half. So it's like a 50% profitability. If I go to the performance summary, the percent, where's the percent? Here, the percent profitability is right here at 50% exactly, because it's 10 trades. You lose 5 times, you win 5 times. Of course, it's 50% profitability. Now, in the strategy, I can take this strategy and say, well, rather than me having to change that number one by one, I can say, highlight the test month, optimize this, and test from 1 to 12 in increments of 1. So it's going to test 1, 2, 3, 4, all the way until 12. That's 12 different scenarios. I'm going to click OK and optimize. This, of course, is going to pick the month that provides, the best return on this strategy. If we go to the strategy again, we see that it picked number 4, test month number 4, which is in April. Now, if I open up the optimization report, this will tell me every single month that it tested. Let me go ahead and make the font bigger here. All right, so you have the report here. You can see that this is day of the week and then tested number. So you can see that the month number 4 was the one that generated the most profit at $8,900. The percent profitability of that particular one, if I scroll here to the right-hand side, where's my percent profitability? It's right here, 70%. It wasn't that far out. So 70% is the profitability. You can see that on input number 1, which is the one that we started off with, that's the one that had an 80% profitability. But you can see that this is pretty much random. There's no really a sequence in the way that the months are tested. I don't see a pattern here. I mean, why is it that April provides you, the best net profit, but then 6, which is not, June, which is not that far off from April, just a couple months later, is the one that provides you the worst performance. So it's really not data that I would want to use in order to make a decision as to uh, if a strategy works or not. Now, if you combine this with a separate strategy, let's say that you're running your strategy, one that you've created yourself, and you want to know, well, what are the probabilities of me running the strategy on January versus, June? Is there a difference? Can I get some statistical values that tell me that one will be more favorable than the other? That type of things could be interesting. This one is just entering and exiting the market arbitrarily based on whether it matches the data or not. Okay, let's go ahead and do some other variations here. If I double click on the strategy and let me customize this, let's suppose that I'm still going to keep it long. Let's say that I want to test every single month. So I'm going to, on the test month, if you set it to 0, that's telling EasyLanguage that you want to test every single month, or that's the way that the EasyLanguage was written. When it finds a 0 for that input, it says, oh, you want to test all months. And in order to vary the calculation, I'm going to say every month, enter on a Monday. Every month, day of the week, every month, enter on a Monday. Okay, that's what it's saying right here. And on the exit side, I'm going to highlight the exit and I'm going to customize that because I don't want to use the end of month. So I'm going to set that to false. And I'm going to day of week to exit. I'm going to exit on the 5th day. So see what I'm saying? I'm entering on Monday and exiting on Friday for all months to see what type of report we get. Okay, the strategy you can see is very busy because it enters on Mondays and exits on Friday. If you look at, the most recent week, we see an entry right here on October 3rd because it was Monday. Today is Wednesday, so it's not going to exit that trade until Friday. We see the exit before that Monday. So this was exited on September 30th, but the entry was generated on September 26th. That was a profitable trade, and you can tell by the color of the line. But did the strategy hold true on all the 10 years worth of data? Let me go here on the strategy performance report. And the performance summary tells me that I made a whopping $487. $487 in 10 years. Not a good result, right? You can see the gross profit here is $129,000. But out of those $129,000, I lost $128,600. So you can see that it's almost a break-even strategy, and that's why the profit factor is 1. And this doesn't even count, commissions and so forth. So it's not a good strategy. Is there can we make any sense out of, trading specific days of the week or exiting on specific days of the week? Well, let's go ahead and see. If I close this and I go into the strategy, let me optimize the entry. I'm going to go here into entry day of the week, and I'm going to optimize this value and go from 1 to 5. So test all possibilities of entering the market either Monday, Tuesday, Wednesday, Thursday, or Friday and find out which one is the best. I'm also going to, optimize this long or short. There's only 2 possible numbers that you can put in here, either a 1 or a -1 if you want a short trade. So what I do sometimes is if I want to test 2 different possible scenarios, I put them as part of my range. So let me go ahead and optimize this. And I'm going to start at -1 and go to 1, but in increments of 2, because I want the 0 to be skipped. I want it to test -1, skip 2, and it goes to +1. That's why the increment is important. This allows you to test both, long and short. I'm going to click OK. So I'm testing the day of the week that I'm entering, whether I'm long or short, and the exit. Let me go here to the exit side, customize this, and I'm exiting the day of the week to exit. The day of the week to exit. So optimize, and it can be from 1 to 5 in increments of 1 to. There's only 5 possibilities. I know that futures, they start trading on Sunday, but this 1 to 5 means trading sessions. It doesn't really, does it mean trading sessions? This does not look at sessions. It actually looks at the date and the time. We'll take a look. I'm going to click OK. So I'm testing, 3 different scenarios, and this gives me a test count of 50. Let's optimize. And here it is. The result came back very quickly. If I go to the optimization report, let's go ahead and take a look, and let me maximize this so we can take a better look. And it seemed like the best combination that it selected was the strategy to go long. That's the one in here. The day of the week to enter was 5. So it entered on Fridays and it exited on Fridays. So it exited the same day that it entered. And it was capable of making a $15,000 profit by just doing that. Remember that we're testing every single month here. We're not testing only January. So we can see trades. If we go to the trade, let me go ahead and close out of this. You can see that there's signals sprinkled all over the candles. But if we look a little bit closer at the entries and exits, you can see that we enter in the open or at the open of the bar, and we close or exit at the close of the bar. So it's a 1 bar trade, entering at the opening and exiting at the close. And interesting behavior. Now, if I go here to the performance report, I can see the profit factor is not as high as I would like it to be. The performance graph, it had a little bit of trouble at the very beginning for the first, 200 trades. It kind of just didn't go anywhere. It actually went into the negative side. By the 200th trade is when it started doing new peaks of equity. So that was a period where it was tough to trade. And I would have given up on the strategy if I had to suffer through that period. But then, it picked up really nicely. But, the question here, will it do the same thing going forward? Very unlikely. Okay. Perfect. And the EasyLanguage. Let's go ahead and take a look at the EasyLanguage. I wanted to show you a few things. Let's go for the entry. This is the code for the entry. You can see the inputs right here on the very top. These were the ones that we were modifying in order to change the performance and also to create the optimization. It also tells you a little bit about what numbers are supported in here. It's looking for variables. These are custom variables. This day, next month, and day counter are things that are that this strategy is keeping track of. Next month, look at the words that we talked about and are part of that PDF that I shared with everyone. Month and the date next bar. This is a good way for you to kind of peek into the next bar and get the month of the next bar. So that's a good way for you to know what the next month is. So this date next bar is a good way to peek into the next bar. Same for day of week. You look at the date of the next bar to see if you want to generate trades for that bar. Because if you've worked with strategies before, that strategies generate orders at the close of the bar, right? So if this strategy is being evaluated on the close, it's generating, orders for the next bar. But we want to make sure that it's able to look at the date and the time of that next bar to see if the trades are valid. Because remember, this strategy is looking at if it's a Monday, I want you to trade. If it's if it's January, I want you to trade. Now, once you come onto a bar that meets that criteria, then it's already too late because you have to wait until the close and it generates the trade for the next bar. So this looking into the next bar is a good way for you to see what's the date of the next bar, but I'm still on this one. I'm still evaluating the strategy on this bar, but I'm able to peek into the date and peek into the the time of that next bar, allowing me to put in a trade exactly where it should go. But this syntax right here is checking that precisely, whether you're using days of the week, whether you're using days of the month, and then placing the trades accordingly. Just wanted to show you how some of these dates and times and month reserved words are used right here inside the code. All right, guys, this is my class today. Hopefully you'll find some use on that strategy. Make sure that you do some testing. Let's see, Rich is asking, could we add this to another working strategy for entry on Monday, exit on Friday, or would it need EasyLanguage adjusts? It would definitely need adjusting, for sure. Yes, there's no way that we can use this on and put it on the same chart because they're still independent. So yes, and I think we talked about this a little bit at the beginning where we said, well, yes, if it meets the day and the month and so forth, then we would have to include our rules in here as well. Because this whole thing right here, if entry of the week, this whole thing right here is going to make sure that you're on the right day and on the right month. If that is the case, then we can run whatever the rules are if you're looking at a moving average or an RSI and only want to take the trade if it's a Monday or a specific day of the month, it would have to all be combined into one code. Yes, I don't see it as being very difficult, but we can use that maybe as an example in one of our EasyLanguage answered classes. Okay. Well, guys, thank you so much for joining me today. Hopefully I'll see you guys tomorrow. Thanks for supporting the masterclass. And if you have any questions, please do not hesitate to reach out. Okay. Have a wonderful day. Great to have you. Bye-bye.